Hey guys, welcome back to a new video at Boost Your Pips. Today I'm going to be explaining the 3 steps to success using the case study EURUSD. I'm going to be explaining some of the smart money strategies we use here at Boost Your Pips. Also, I'm going to be going over the 3 steps of success, which are telling a story, market bias, and order block validity. So let's get to it. First thing you're going to do is look at the overall bias of the market. As you can see, on monthly we are on a downtrend, weekly we are on a downtrend, and daily we are also on a downtrend. Next thing you want to do is check out what the market has done recently and what's happening right now in the market. So as you can see on the weekly, we have hit a sell order block here, which is confirming our downtrend of the market on the monthly and weekly. As you can see, hit a sell order block, and it's going to continue to go down and possibly break this lower low. So now that we know that we are looking for sells based off the monthly, weekly, daily, and a sell order block on the weekly, we are going to be looking for sells in the market as of January the 6th, 2021. So now what we're going to do is identify the order blocks that we see on the chart. So we have one order block here, here, and here. I'm going to be going over through why these order blocks are valid. So if we go on a lower time frame, you can see that all of these order blocks have the two things we look for, two things we need actually in an order block. They have a break of structure to the downside, also have a massive amount of bearish movement increase after the break of structure or during the break of structure. So you can see over here, bearish momentum increase. You can see on this one, bearish momentum increase, also being a break of structure to the downside. If you're looking for sells, you want to see break of structure to the downside. If you're looking for buys, break of structure to the upside, and vice versa for the momentum, bullish momentum and bearish momentum. So after this, we then go to the 4 hourly, and knowing that all of these order blocks are valid because of the break of structure, actually counters breaks of structure, and also the bearish momentum increase. So if we are present in this market on the 11th of March, you'd want to set an alert and wait for price to hit. As you can see, that's what we have done, and price was triggered on the 17th. So if we look here, if you actually go on a lower time frame, you can refine these order blocks for better entry. Say if we go here and we refine it for better entry, you'd usually want to identify the different points of interest on each time frame to make sure you know what you're doing and you know like what time frame you're in and the overall bias of each time frame. So now that we've identified our lower time frame entry, you're gonna go for 50% of that and put your stop loss just above this. So what I also want to explain is what's happening in this trade. So as you can see, I would have taken this trade because there's been countless breaks of structure to the downside. Prices tremendously moved away from this order block. As you can see, it's moved massive amount. Only banks could do this. As you can see, bearish momentum. It came back, failed to go back and mitigate, came back, failed to go back, create a new low. Afterwards, price created this imbalance, which I really like. An imbalance is avoiding the market, it has to go fill back again. So as you can see, pending orders here that haven't been filled, so it goes back to fill them, continue price going down. So I really like this imbalance because not only are we looking for sells, but this imbalance has to be filled. The only way it can be filled is market goes back to here, which market would have to sell off to go back to here, and that's what market did. After this imbalance, which massive confidence to our trade, price then came back up here, made liquidity on the lows, on the downside and the upside. I mean, it then grabbed liquidity to the downside, grabbed liquidity to the upside before tapping into our 15-minute point of interest and dropping all the way down here. As you can see here. So this trade is valid because many reasons, and this trade was taken because of many reasons. First of all, we have been told a story about the market. The story is that overall we are on a monthly downtrend, weekly downtrend, daily downtrend. Everything is on a downtrend. Also, we have just triggered into this sell order block, which we unfortunately missed, but we caught re-entry of this order block and it ran for nice 250 pips. But going on to what I was saying, you're going to look at the story of the market and market bias. Market bias I've already explained. You're going to trade pro trend as it's less riskier and you can maximize your profit. Next thing I went over is order block validity. So if you go over this again, you identify your order block being the last sell before the buy or the last buy before the sell. So in a bearish order block, as you can see here, we have identified, if we go back to the one we actually refined on the 15-minute, we've identified 4 hourly point of interest and scaled it down to the 15-minute. You identify order block by looking at where was the last point before structure broke. As you can see, this is the last point where price decided to create before dropping all the way down here, breaking structure, grabbing liquidity, then going back here, mitigating it. So if we closely look here, we identify the 4 bullish candles, which are these. Put it there. This is our lower time frame. If we then go here, go here, go here, go here, go here, you can see here this order block was triggered. As you can see, this order block is valid. As you can already see reaction to it. This is actually just a large amount of confidence in this trade. This is probably one of the best trades I've taken, or best confidence trade I've taken. You can see we have a liquidity void here, also known as an imbalance. Also, we have liquidity taken to the upside. Liquidity created to the upside that needs to be taken out. Also, we have liquidity created to the downside that needs to be taken out. So, in this order block zone, price created liquidity, taken it out, came back here and dropped off. So, we know that this order block is now valid because price has reacted to it. It mitigated before. This was actually part of a bigger move, just going back to this order block, grabbing liquidity and going back down. So, I think I've explained it pretty well, but the 4 steps we need to look for, 3 steps we need to look for in a trade, and what we like to do. We like to look for the story, which I've explained, market bias explained, and order block validity, which I think I've explained really good. Remember, if you're in a bullish market, it's the last buy before the sell. If you're in a bearish market, it's the last sell before the buy. Oh, my bad, I got mixed up. If you're in a bullish, it's the last sell before the buy. Bearish, last buy before the sell. Yeah, so as I showed you, just to recap, always keep in mind every single time frame, as it all plays a role, all plays a significant part in trading. Also, keep in mind your higher time frame bias, lower time frame bias, everything. So I'm gonna wrap up this video for today.